Alright, what's up traders? Ken here from the Dyslexic Investor, and we are looking at the charts here. What a day, right? So how in God's green earth did we get here? So basically on the 19th of February, it just seems such a long time ago, about 2-ish weeks ago, we were hitting all-time highs in the S&P 500. Super high up here. And then just some bad news, the potential of the coronavirus. We saw some stuff slowing down. Apple kind of guided down previous to that in end of January. And then we had more guiding down. Then we had a huge drop. Again, this is on a daily chart. We saw the purple, which is the 8 exponential moving average on the daily chart, crossing over the 21. That's just the sign of very sharp selling or a trend change or momentum change in the overall feel of the market. And then we just continue to come down, hitting very lows on the 28th of and basically the last possible day of trading in February. Had a nice rebound. Kind of came up to the 200 exponential moving average, kind of traded in and around of this, and then continue on or spiral down, and then opening up today and with a huge gap down and closing extremely low at $274.23 on the SPY. So $274. That is a significant amount. I'm going to start drawing some lines here. So this is how I'm going to start breaking it down. I'm going to start creating alerts here. This right here, it needs to break above this, of course, the gap. It needs to fill that gap. What's going to help us the most is going to be popping this out to a weekly chart. This kind of gives us a little better understanding of what's happening here. I think we can easily probably touch 266, which I've said before, so I'm actually going to create an alert for this. So we're going to go, if we go below that, I'm going to move it up just a hair because I don't want to be too precise. If I can move it up a hair. Doop, there we go. Alright, that's there. So that's basically trading in range. So where are we due for a bounce? So if we are due for a bounce, you would have to look here on the RSI on the daily. The momentum bars are basically off the charts with how much of a flush this has been. The RSI has not honestly caught up to the understanding of what's happening. So this is on a daily chart. If you go on a weekly chart, this is a monthly chart, my bad. Let me go back to a weekly chart. We can see here that it is near its basically, so my RSI is slightly different. I use the 80-20. Usually people do 30-70. So this would be getting you a positive reading if you had it at 30. Most likely it's going to be indicating that. So showing that it's completely oversold and it's due for a bounce. This is a weekly chart, so this is a massive amount of stuff. So we basically closed out erasing everything since basically of last summer. That doesn't seem like a lot, but it really isn't in the large scheme of things. So the next chart I want to bring out to a monthly. So each of these candles are a month, and we're looking at 15 years. So this gives you a little better, the overall drop from the high to low was extremely fast. Just basically zero, just notice, and just drops out of the sky, being hit by a rock in the head and just falling flat, and then is waking up and like, what the hell happened? On the monthly chart, we are fairly low on the RSI. Again, not as low as 0809 because that was just substantial there. We are kind of pulling up to the same level that we had of end of 18, the December of 18 low, potentially. This is a little bit more sharper. I think that we could be seeing more lows to come due to the amount of limits that we had today. So a limit is when they just hold the stock market, depending on level, it's at level 1, 2, and 3. Level 1 is about 7% down, level 2 is about 13%, and level 3, which is the worst, of course, which is 20%, and they just suspend trading for the whole day. And they just basically turn everything off and tell everyone to go home. The other two, level 1 and 2, is usually a 15 or 20-minute intervals of how they kind of suspend trading and just basically turn the breakers off. So we are, in the scheme of things, we broke the 34 and the 21 and closed below it on the monthly chart. Since March is not completely over yet, we're just basically in the first week, this could come back, but overall this is not a great look for the market. Once the again, I need to make this a little bit thicker. If that 8 crosses over the 21, I would like to be able to get out of Dodge and buy some puts in the SPY, or basically turn everything into cash, just due to the fact that that could be a potential large downside. Again, I don't know what's going to happen. No one has a crystal ball. But that being said, I just want everyone to be fully aware of what the scenarios could be, and just have to be ready. And just if you're starting trading or investing today, this might be a great time to get some of your favorite stocks to start a small position. Like Tesla was down tremendously today. It was absolutely crazy. What else was down? AMD was down quite a bit today. But if you just look at these all on a monthly chart, they haven't really pulled back that much. That's why I'm saying is we're just in the starting first or 2 innings of this. But if you look at a CCL, that has been just absolutely destroyed, lack of a better words, basically almost hitting a all-time low. So all-time low is about $14.85. We closed today at $21.74. Again, huge red drop candles, never a good sign. I feel like this can easily probably touch the $17, $18 level without a doubt, and I wouldn't want to be buying into this yet just because of that reason. Like, I don't like to bottom fish on this particular thing because this is completely isolated issues to them, and then on top of having the virus and then the overall economy slowing down, what do you do? Like that's just a very terrible scenario for them playing out. The other thing which I found very surprising is the sell-off of Bitcoin. So let's just pop this back to a weekly chart. We basically hit a high of like the 10,000 and we've just been continually coming down from there. I can see that coming up, going lower, since basically these moving averages are crossing over and start heading south. You see the 21, which is the yellow line, starting to curl over and coming down. So I can see that as a potential lower prices in Bitcoin, which I honestly don't actively trade in those. The other one I wanted to pull out is the VIX. So this is VIX is the fear gauge, also known as the volatility index, and so forth. So the volatility index basically trades off the SPY or the Standard & Poor's contracts, or ES, on basically having the overall fear in the market. So this is when there's a lot of selling going on. So I just wanted to pump this out to a weekly. So you can see here the high of 53 and 15 cents is basically, it trumps, no pun intended, the one that we had basically in 18 when we had that little flash crash due to some numbers there, was only at 30. All right, we're almost talking nearly 40% more. Then if I pop this out just a little bit more to the 15-year, you start seeing where it rounds up. Like, so during the very low of the financial crisis, which wasn't the low, which was October of a 69.4, that's about 15-ish, not 15-ish completely, but you can see that it's not that far off from that. Is it going to be going, if it's going to be selling off more, I'll be on the latter side of saying it's going to be selling off some more. So if we go back to, let's just go to SPY and we see what happened in October, let that load. So we go to October right here. you have this huge down day. This is that huge tick right there. But guess what happened? We didn't do a straight up bottom and continue to go higher. We kind of sold off for basically, let's just call it, lack of a better word, another 20%. So the initial fall from the high to the low was about 45%, and then continue going lower from there. So that's already a huge drop. And yes, you could have bought in there, but you would have held for another 5 or 6 months to the low of 67.7 in SPY. Okay, this product is trading at $254. It was trading $67 back in 2009. Could we see that price again? Highly doubtable. I don't see that coming, but I could definitely see us potentially touching a lot of these lows. So it just all depends on how these moving averages cross over. And again, no one has a crystal ball. I just have to look at what the charts give me. So if the pink line which is the 8 moving average crosses into the yellow, that could be a significant trigger to the downside. As you can see, that has not happened in the past, basically, lack of a better words, 9 years. We had a little bit of issue here, which again didn't cross below the 21. Whoop, my bad. The only time it has actually happened is in 08-09. So we had this kind of crossover. So basically, oh shoot, let's go here. So this is the high, and then to the low here, which is, oh shoot, I messed it up. My bad. Shoot, there we go. Draw this again. Is about 20%. So we dropped 20%, then had a huge up-ish part of the time, but then continued trading sideways, which is what I feel could be happening. We could have a pretty nice uptick, but then continue trading sideways, and then the drop happens. And once that drop happens, I feel like that might be the time to basically back up the truck and start buying your favorite stocks, and just going from there. Guys, I hope you guys have a great rest of the trading day or the rest of the week. I know it's going to be tough. I'm going to try to do some nightly videos on some potential look at companies, but it's just going to be so difficult to recommend stocks right now, just to the overall craziness that the markets are giving us right now. And this is basically, I've not traded anything like this before because I wasn't trading in 08-09. And I've just been trading since like 14, maybe beginning of 13, and that you can see here that's just been a nice ride up. And then 15-16 is my first experience with capitulated markets, and then a nice huge bull run. Then we had all the shenanigans in 18 and 19, and then a nice run up, and now we're just getting kind of more of a pullback, but we'll see what happens. Again, guys, just stay tight, trade small, and I'll catch you guys on the flip side. Peace!